Here's a summary of entrepreneurial accounting in 20 minutes.
There are two methods of accounting: cash, where you record income when collected and expenses when paid for, and accrual, when you record income in the period in which it is earned and record expenses in the period that the service was rendered or in which supplies were received. Typically, when a company is at a certain level of revenue, they are required to do accrual accounting. When you're looking at financial statements, always keep in mind whether it is cash or accrual. The income statement summarizes the revenue, costs, and expenses incurred during a specific period of time. When you're trying to find out what your revenue, discounts, returns, cost of goods sold, gross profit margin, or expenses are, you want to look at the income statement. The balance sheet lists the company's assets, liabilities, and equity, also known as shareholders' equity or owner's equity. Look here to find out what your cash, accounts receivable, equipment, accounts payable, accrued expenses, convertible debt, shareholder loan, equity balances are, among other things. The bank reconciliation is used to tie the bank balance to the cash balance per the financials. The accounts receivable aging tracks how much customers owe you and how long the bill has been outstanding. At a certain point, AR should be written off. Accounts payable aging tracks how much you owe to vendors or contractors. The cash flow statement indicates the change in cash for each period. It's organized into 3 sections: operating, investing, and financing. You want to look here when you want to find out exactly how much cash went in and out of the company. This is particularly important when a company is using the accrual method of accounting. In the handout section of this course, there is the Entrepreneurial Accounting quiz. Please print out this quiz and spend some time answering this question before you continue on with this video. I'm now going to go through answers on the Entrepreneurial Accounting quiz. The first question: accrual accounting is when you record revenue and expenses when you earn them. Cash accounting is when you record revenue and expenses when you receive them. On what financial statement does cash appear? Balance sheet. On what financial statement does revenue appear? Income statement. On what financial statement does convertible debt appear? Balance sheet. On what financial statement can you track your margins? Income statement. Question 7. Why wouldn't the bank balance per your financials agree with the actual bank balance? This is due to timing differences. So for example, if you've issued a check but that check was not cashed immediately, there's going to be a difference. What financial statement shows the change in cash and where cash was spent? That's the cash flow statement. What are the components to a balance sheet? Assets, liabilities, and equity or owner's equity. The balance sheet shows the financial position of a company at a specific point in time. Net income equals revenue minus costs minus expenses. If you made $1,000 from consulting revenue and spent $300 on travel expenses, what is your net income? Your net income is $700, assuming there are no other costs or expenses. Net income increases cash, which then flows to the balance sheet. Congratulations, you've now completed Entrepreneurial Accounting. Feel free to email me at the address above, or if you want more, please check out Simple Finance for Entrepreneurs. The website is also listed on the slide. Best of luck with continuing to grow your businesses.